at Coastal Leaders Realty. Thank you for joining us this week's Tea and Crumpets. And today I have Camden Boyd with Southern Shield Insurance. Thank you for joining us.
Thank you for having me.
Yeah, so tell us a little bit of history about your company and just how long you've been with it and in the insurance business.
So Southern Shield started in 2018.
Mm-hmm.
We have 4 agents that all came from the captive world, and they all own their own book, whether it was Allstate or Alpha, and they all merged together, formed Southern Shield from scratch, and we've grown 5,000 customers in Baldwin County.
That's awesome. That's a lot of people. That's a lot of property.
A lot.
Do they need a realtor? I'm just kidding. I'm just kidding. No, that's awesome. And so the people that all came to form this company, were they all local more so, or were they coming from other areas of the country? Are they all pretty much here?
All local.
Yeah.
We've got an office in Damonette, so we've been plugged in there for 20-something years. Eastern Shore, obviously this area, and then a Mobile presence as well.
Well, that's awesome. That means that y'all really know the market. Y'all know just pretty much, I mean, like you said, you grew up here, so you know the area as well. And so now, what areas does your company cover? So do y'all do all this Alabama?
All of Alabama. We've got lots of customers in the North region. One of the partners lived in Birmingham a while.
Okay.
That was where his Alpha book was.
I gotcha.
So he was able to cover that region a lot. But predominantly Baldwin and Mobile County have been our sweet spot.
Yeah.
This is where we live and play. So we know the market very well. However, we write all the state, and then we tap into Florida also. We're licensed there. Obviously being so close, we deal with a lot of Perdido.
Oh yeah, for sure.
And then Mississippi as well, being as close as it is.
There's so many people that buy here in this area, like you were saying, like Birmingham. I mean, they have second homes here. And one thing is too, people that are using y'all here, you know, a lot of them aren't, they're permanent residents. So the nice thing is y'all are able to possibly write their coverage for their homes elsewhere. So, and are y'all able to do other states besides the Mississippi, Alabama, and Florida? Are y'all expanding out? If, like, for instance, if I had a client in Texas, would y'all be able to possibly write their home policy there too?
Definitely.
Awesome.
Our license allows us to apply for reciprocity. So almost all states, we don't have to test or do anything different. If we have a client that has lots of businesses or different properties in a region and they're just really interested in using us, we can just go apply for that year or as long as they need us to.
Well, I would think after getting 5,000 clients just from word of mouth and referrals, I would think that that would start becoming a good problem to have, where you have to file for reciprocity. Yeah. So how do y'all determine, you know, coverages and what's best for the property? So
a lot of times that's based off the insurance companies' requirements, what they want. So for instance, if it's an older house on the coast, it's going to get placed a lot differently than if it's a gold fortified.
For sure.
So a lot of times the construction will play a role also. We like to incorporate that. And then our clients' needs. So one client may be having the property as a rental, or maybe a condo. They may not care as much about their personal property.
Yeah.
Whereas another, this is their baby, this is their sweet spot.
They have lots of clothes.
Exactly. High-end valuables. So we like to gel those two things together, kind of the property versus their independent needs, and make all that mesh.
That's great. So now one thing we were talking a little bit earlier, I was just explaining to you how, for instance, when we're selling a piece of property, I have a lot of times, like, my clients will come back and they're like, hey, you know, for instance, I'm buying this house for $500,000, but the coverage amount's only $300,000. I said, well, you know, we're not insuring the land.
Right.
And so I said, you know, what they'll do is they'll take, you know, the square footage, the living square footage, and they'll multiply that by a number, and they'll come up with that, you know, replacement value. What do y'all typically see on average is that figure for price per square footage that y'all usually use?
Definitely. Usually we're around $250 to $300 is that price we like to come off of per square foot. And that's always just given us a good metric because, you know, we're removing the land aspect there.
Exactly.
So these homes aren't usually as valuable as the appraisal.
It's all
maybe.
about location. Yeah.
Exactly. And the other side of that, we've got proprietary software, just like appraisers do, that allow us to go in, and it pretty much gives us a price on that house. And so we can kind of manipulate that. Usually we want to be insured about 80% of the property.
Okay.
Most of these carriers require.
And one thing that I was going to ask too is the deductible amounts. You know how like a lot of times you'll see certain percentages, and what are those? Is it a 2% or where people can, you know, if the premium's a little too high, they can increase that deductible amount percentage. So what are the deductible percentages? Is it 1%, 2%, 5%?
Definitely. To kind of take a step back from there,
Okay.
A lot of that's based on peril.
Okay.
And so peril is the disaster that's going to hit the home. Is it lightning? Is it hurricane? So your standard perils, fire, lightning, explosion, things of that sort, they're going to have a smaller deductible.
Yes.
And typically, you know, you could set that as
it's a dollar amount.
Correct.
Yeah.
You can do percentages, but typically it's a smaller dollar amount, less risk.
Yes.
Whereas we are a very hurricane prone area.
Oh, yeah, that's a wind portion.
Exactly. They've added that deductible in there. That's normally a percentage anywhere from 1, 2, 3, up to 10.
Yes.
If you want it. So we kind of tell our clients, you're either going to pay for it on the front end or the back.
Yes. Yeah. And one thing is too, a lot of times I've realized people might think that percentage is based on the actual damage amount. It's not. It's on the coverage amount.
Correct.
Yes.
So if you have $1 million house and you've got 2%, that's $20,000.
Yes.
And so the deductible gets a little confusing too. You don't actually pay for that.
Yes.
So if you had, let's say in that scenario, $100,000 roof, exaggerating, that roof gets damaged, you're not gonna get 100 then. You would only get 80. So they're just gonna deduct that from the payment amount. You'll never see that number.
Yes.
That's your copay, if you will.
Yes. Yeah. A lot of times people think that, oh my, and actually when I didn't understand, it was a long time ago when I bought my house, I had an issue. And I was like, oh my gosh, you know, I thought I was gonna have to pay. So I'm a realtor, and you know, you live and learn. And I was like, oh, okay, yeah. So it's one of those things that sometimes people just don't realize. And I had a friend that she overinsured her house, and then she did a large deductible. Well, after selling, she had a tarp on her roof for quite some time because it just didn't cover it. Like her roof damage, like her deductible did not cover it because it was over. I mean, it was like probably like a $30,000 deductible, and her roof wasn't even.
And that's
It's kind of a sad situation, but I mean, I had told her that was way too much. She did not need to put that much coverage on her house. But she didn't listen to me.
That's a topic too we run into when we're giving competitive quotes. Somebody's deductible may be at 5%.
Yeah.
And so then we get in touch with that client and we explain, hey, we know they're $500 cheaper on the quote they've given you. Do you realize that you're going to eat this much more?
Exactly.
And a lot of them don't until a storm hits, and it's unfortunate.
It is an unfortunate situation. So, speaking of storms, tell us how the claim process works. We have an issue with, and whether it be, you know, a fire, or a hurricane. So.
Definitely. So the bulk of my time in insurance has been spent in the claims world.
So you're a pro.
Very familiar with this side. Seen a lot of tragedy, so now I'm able to carry that. Better outfit people, coach them a little bit more.
Yeah.
So I like to do that with the clients. The claim side, if there is a claim and it comes to fruition, then we always like to tell our clients, call us first. That way we can coach them a little bit and explain, hey, here's how this process is going to work.
Yes.
Here's what you can do to maximize your claim payout and to make sure that you get all your ducks in a row before you bring it.
Yeah.
And that just helps them make sure that everything goes smoothly. So typically, insurance companies have a timeline that you need to report that claim. So whether that's us or them directly, we always make sure that happens efficiently.
Now, does that timeline, does it fluctuate, or is it typically like, you need to contact them within a week or days, or?
Usually as quick as possible.
Yeah.
I would say hours if you can.
Hours.
Within the day.
Yeah.
And sometimes you don't know if there's a pipe leaking behind a wall for a month.
Exactly.
And then you find it. You can't tell them that until you see it, or or you have that leak detection company come out. So once you're aware of it, you want to make them savvy. That's in the policy too, is their requirements.
But nobody ever reads that stuff. That's why they call you. Like, hey.
Exactly.
And I was reading the size 8 font. It's like on the 5th page down. So
it's confusing.
It is confusing. It is. And so, and then one thing about our area, obviously when we're talking about hurricane prone place, we're also in certain flood zones.
Right.
So some people don't understand the flood zone situation. So tell us a little bit about that topic.
Definitely. So you either have preferred or standard flood zones.
Okay.
So your preferred are obviously, these are regions that aren't going to get hit as hard or often by a flood. Usually higher elevation, and so those get categorized typically as an X zone. Those don't need elevation certificates if you need insurance, things of that sort. Most mortgage companies, if it's preferred, don't require flood insurance.
Yes.
So sometimes we'll tell our clients, hey, we had a 100-year storm 10 years ago. That area got flooded a little bit.
Yeah.
You may want to buy it.
I always tell people, I mean, because you just don't know how the drainage system's going to work.
Exactly.
So, and there's a lot of